Oh, happy holidays, Merry Christmas. Welcome to my weekly review. Here you can see Jerome Powell here as the Grinch this year as he fights inflation. He's got one arm tied behind his back because the government keeps spending like drunken sailors. And this is a cartoon that I borrowed from Brian Shannon. And thank you, Brian. This is Santa giving us the finger this year as the market has been flat out, crappy. Anyway, that's enough for Jerome Powell and Santa. I want to take a look at the indexes and some stocks here. I'm going to begin with the NASDAQ. By the way, these are not buy, sell, or hold recommendations. I do this for my own amusement. Anyway, you can see the NASDAQ is 35% off its high. It's just in a downtrend. How do I know? Because it's making lower lows. That's the definition of a downtrend. Lower highs, lower lows. Okay, so the last low that it made here at 10,088 was on October 13th, and it had this little pseudo rally up here. It couldn't even get up to its 200. And then this is the black line here. The downtrending black line is a 200 simple moving average. Didn't get there and just kind of fell out here below its 50. And once again, it's like 11.3% below this 200 simple moving average. It's been trading below the 200 since January 18th. It's been almost a full year, which makes this one of the longest times that it's been below its 200 in its history. So this is turning into an epic bear market here. And after, 12 years of, just straight up, you got to expect to give some back, right? Markets don't always just go straight up. It's not your birthright that the market's going to go up every year. And so now it gives a little back, probably give a little more, probably take a little more time. Wouldn't surprise me if it got back to, these COVID levels just below 10,000 here. You can see it better on the weekly. I believe this is a likely area. If it falls below there, then, we'll just deal with it one day at a time. No predictions. Just anticipating that this low here, it's going to retest at least 10,088. I expect a retest, and if it goes below it, so be it. Oh, well. You got to think about that. An index that lost 35% of its value in a year, it's pretty severe that these interest rate hikes are doing to these the growth index, which is the NASDAQ. This is the Dow Jones Industrial Average. It's only got 30 stocks. You can see the golden cross here where the 50 goes above the downtrending 200. It's 30 stocks. I guess the thought process is that they have better balance sheets and can withstand what allegedly is supposed to be a really rough economy in 2023 once these interest rates start to bite and we have the inverted yield curve. And that's enough talk about macro stuff. I'm interested in, stocks. This is the S&P where it hit this low on the 13th, rallied up to the 200, got rejected, came up again, got rejected twice. Two Matombos here said, no, sir, you're going down. And it's now below the 50. So anyway, the markets are weak. They're really, I got to point out that they did have a good October and a good November. So let's give it that. The S&P was up almost 8% in October and another 5-6% in November. So it did have a couple good months, but now it looks like it wants to resume its downtrend. Anyway, what's bringing it down? Of course, anytime you got these big mega cap tech stocks, they're being sold. So they're going to drag the indexes down. We know this. I've been talking about this for months and months. These stocks are just too big, too overowned. They're too bloated, and they've got to trim them. And when Microsoft and Apple are on their way down, the indexes are going to go down. This looks like the S&P here. It just got rejected at its 200. Now it's on its way down. These are Microsoft and Apple are in, just about every index, except for the smaller and mid cap ones. But the big indexes, so if they're going down, the indexes are going down. They propped up the index in 2021. They're dragging it down in 2022. Google here at 89. You might look back in a couple years and say it was a good buy at 89. We'll see. It is a cash cow here. It looks like it's in a stage 4 decline, but that does have very little debt and good cash flow and return on equity. But the big one, the big seller is Tesla, no doubt about it. Look at these pink volume bars here. That is not Aunt Sally selling this stock. This, usually I like to short stocks when they get rejected at moving averages here, like it was, pretty consistently. And this is a short here. You could short it there when it got rejected at its 21, but now it's just straight down. I mean, yeah, I don't know. You got to wait for a bounce or something if you want to short it, but there are a ton of sellers in this stock. That's not just Elon Musk or Aunt Sally. There's just some people who want out of this thing. But let's take a look at the number one industry group and something that people are buying. The Oil and Gas Royalty Trust, the number one group. Why? I believe it's his yield. 14% yield here. Its thing is, it's still 23% off of its high, though. So it has been sold. But it came down to its 200, and it's holding above it now and starting to trend a little higher. I'm really not interested in these types of stocks, but you got to give them credit. They've been top stocks for a long time, and people want them, I guess, for the dividend. This is Permian Basin. It gets less than 300,000 in volume, average daily volume, but it broke out on Friday. It was up, 8%. Not bad, right? I mean, stock making new highs, paying you, nearly 5%. In this market, people are buying this stock. There's another one here that I had to laugh at. This is Cross Timbers. 38,000 average daily volume, but this setting up in a nice base here. Somebody's buying this stock. I don't know. It's got like an 8% yield, and it's the number one group. So, it's holding up in this crappy tape. We're just playing the hand that's dealt here. We don't make the hand. We just play what's dealt. This is a Tidewater. This is a Field and Services group, which is the number two group. You can see this base and a breakout, and then forms another little shallower base here. Once again, it's got 1.2 up down volume, more buyers and sellers here. It's near its high. It's above its moving averages. It's forming a base. That one looks good to me. This is a 9. This one broke out and is giddy up 14% on Friday. Yes. Not much to say there. Stock's making new highs with heavy volume. It was only up 40% last week. So 9 is doing well for the shareholders. It's slower moving ones in this group. Halliburton is one. In the field services, this one's set up with a cup with a handle pattern here. We'll see how this one shakes out. This thing still has tremendous growth in 24%, 37%, 39% with triple digit earnings growth. So, Halliburton looks good, and same with the Schlumberger. Nice cut pattern, long handle, supported at the 50. Those stocks look good. I mean, with the NASDAQ down 35% and the XLE up, 50% this year? Yeah, so, not much of a comparison there. This is the only ball game in town. You can see the difference here, the NASDAQ and the XLE. I do not really condone the integrated or the exploring stocks right now. I kind of like the field services stocks and the transportation stocks. This is Sting, Scorpio Tankers. It's just grinding higher, right? I mean, pull back to its 50 supported, pulled back to its 50 supported, and now it's above its 21. If we take a look at the weekly, it's 5% off of its highs. Just doing nothing wrong. 1.2 up down volume, more buyers and sellers. Scorpio Tankers looks good to me. TRMD, TORM, same thing. 3% off of its high. 1.6 up down volume. There's above its 21. What's not to like there? I mean, these stocks are just doing really well. Let me see. I'm going to get out of I'm going to go through the equipment stocks. Weatherford, another one that's just making new highs. Last week was up 11%, above its moving averages. 2.1 up down volume. So people are buying this stock. DNOW, I put this one down because it was more set up in a base. Yeah. This one has got this base on base. And, when stocks go base on base on base after a while, that's kind of like all they do. It's just base. This thing's got like base, consolidation, base, consolidation. So we'll see if it can break out of this flat base right here phase. It's at 1285. We'll see. DNOW, but I had it on my list. Yeah, 1.6 up down volume. So it looks like a good stock to me. Maybe it'll break out soon. Anyway, let's break away from the oil and gas stocks and go to the biotech, which is one of my favorite areas, like 800 stocks to choose from. And this one is in the penthouse. Catalyst, they just signed a deal with a Japanese drug maker to sell a drug in the United States. They paid like 130 million for it. It generates, about that per year in the United States. So they're going to upgrade their in Q1. Once the deal goes through, they're going to upgrade their earnings and sales guidance for 2023. So I would expect this one to go higher, as they just bought some inorganic growth, which is great. It's a good way to do it because you don't have to go through trials and get rejected by the FDA. So that's a really smart move by their management team there. This is PCVX. This one gapped up on trial news and is just forming a flat base here. It's not giving up its gains. It's above its moving averages. It's 3.2% off its highs. Some people call that a flag pattern. Call it whatever you want. Some people call it a shelf. I don't really care. It's holding its gains. And whatever you want to call it, whatever floats your boat, that's fine. RXDX, I always make the joke, anything with an RX in it, it's got to go higher because the baby boomers they like their drugs. And this is Prometheus. This has got had news recently, and it's kind of doing the same thing, forming a little pennant pattern here. Made that high at 117, just kind of flagging there. So definitely one to watch. Any stock that in this tape that's holding its gains like that is a really strong stock, 7% off of its highs. So that one looks good. Anyway, let's get away from these stocks. Just some random stocks. The retail stocks got a boost from the Nike earnings here. This is CROX, a stock that I like, not because I just like their shoes. It was up, more than 8% after Nike's earnings. And this thing gapped out of a base here on earnings and just has not given it back. It's formed a little flat base pattern here for about 6 weeks here, and I like it above the 104.23. So if CROX can get above that level, I'll be a buyer. I don't know about anybody else, but I like CROX. ELF is another one. The ELF on the shelf here above its 21. And any stock that's above the 21 and just 4% off its highs, it's doing great, right? Cash flow, got a return on equity here, 1.6 up down volume. So somebody's buying that stock besides me. Alpha looks good. I like these. I like retail. I'm a sucker for retail because I can go to the stores and look and see how they're doing. Celsius, this one's got the Pepsi put. I think Pepsi's got the ability to buy more of this. I think that was the wording in their contract. And this thing is holding up well. If you look at the weekly, really like the weekly chart here where it formed this consolidation. And then this cup with handle pattern the last 3 weeks, coming back in holiday volume here. So you got to like a stock that's pulling back to moving averages and light volume. So Celsius looks good to me. So, I went through some stocks that I like, some stocks that I don't. But one area that you got to avoid, it's always nice to know what to avoid, the semiconductors. These things are a disaster. This looks a lot like the S&P where it came up to the just 200 and got rejected a couple of times. It got the Matambo treatment and see you later. I mean, and then if you look at some of these stocks here, Global Foundries, just they're like a trap door, just fell out. the floor fell out from underneath its feet. Now it's below its 200. That does not look good to me. Same with the ON Semiconductor. These are not healthy looking stocks at all. So anyway, the technology, big cap, semiconductors, you got to avoid. And I like some retail, biotech, and much of the oil and gas. Anyway, we never give up. Thank you for watching. Happy holidays.